Okay, so this is starting to get difficult. I am not going to lie. Even for someone who is a professional like I am, this cadence is hard. So if you are still with me, I want you to know I appreciate this so very, very much, because the only reason that I am showing up today is because I made a promise to you to show up every single day for the month of October 2025 here on the podcast feed and on the YouTube. And I'm starting to think ahead to what I'm going to do after the month ends. And I think I'm going to go back to, at minimum, a weekly cadence with possibly some extra drops. So if you are getting used to this daily, cool. But I am going to take a little bit of a break once we're through this sprint, so to say, and then kind of reset. I do have some stuff planned, and there is a bunch of kind of new series that I want to drop on the podcast and certainly on the YouTube channel. But it won't be with the same intensity as this, because listen, like, I sat down today and I have been sitting at my desk for just about an hour, and it has taken me this long to get onto the mic and to do today's episode. And what got me to get out of my head and I don't want to do this, and I want to scroll around the internet, and I want to do deep dives on all these things that don't really matter. And, you know, even though my to-do list is in my Notion board, I have a task list, like a smaller one on my notebook. I have all this stuff that I need to get done, including this episode. What I remembered is, Erin, the momentum you created is only valuable if you can consider how it's going to impact your business. So if you're going to create momentum doing all this busy work and scrolling and sitting at your desk and feeling busy, cool. How is that impacting your business? And then I was like, okay, wait a minute. Honoring my commitment, showing up on my podcast, watching it grow, creating additional content for you to deep dive with me is going to grow my business. And that's what I want to talk about today, is really this concept of the unsexy truth about profitability in business. And I'm not talking about revenue. I'm not talking, I had a 5K month, I had a 10K month, I had a 20K month, I had a 30K month, whatever it is. And I'm not talking scaling to multi six figures. I actually think we need to talk about profit, which is the money that's left after you pay for everything. And so this morning, when I was stuck in this swirl, I actually started to think about, how is this profiting me? It's actually not. It is a bad use of my time, and therefore it is a bad use of my resources, and therefore it's actually eroding my profit, because I was wasting work time doing quite literally nothing. I cannot tell you what I did over the last hour. I wrote a couple things down in my notebook. I checked LinkedIn, and then I don't know where the time went. I don't know. I watched some running videos on Instagram. I eroded my profitability. And I spent a little bit of time last night looking on Instagram at some of these coaches and these, quantum manifestation folks and, money coaches and all this stuff. And I was like, what's really interesting to me is that not all of them, I'm not going to say with a blanket approach, but very few of them actually talk about profit. A lot of them talk about how many people they're enrolling into certain programs and how many things they have sold. They talk about revenue numbers, as in, I just hit a 100K quarter or whatever that may be, but they don't talk about profit or spending, right? Because those two actually are kind of related in business and in personal finance. And I have been in enough of these programs to know that it is also not very much coached on with respect to that profit is a habit. Profit is also a business structure. It is also how you are structuring your business. And it's not as simple. I mean, it can be simple. Listen, it can be simple. But it's not always just a matter of raise your prices. I think I've been railing on this concept of that being the strategy for the entirety of this transmission series, is that nothing bugs me more than seeing somebody just take advantage of a situation to raise prices without consideration for how that fits into the structure and the energy of the business. Because it all comes out as considering profit. So here is what profit is. Profit is everything that is left over after you have paid your business expenses. So your taxes, maybe you have a VA, or you hire someone to help you with your, Canva designs or your documents or emails or whatever. And all your software subscriptions. So like, when I pay my podcast hosting fee and all that stuff. So it's all that stuff. And then here's what a lot of folks that at least I have worked with in the creative industry forget. Then you do need to pay yourself a living wage. So that is not your profit. That is not your profit. That is what you are owed from the business. And even if you are not a corporation and you're a sole proprietor, that's what it's called in Canada, mentally you need to think about it this way. So if you make $10,000 a month, about $2,500 of that is going to go to just standing up the business. So taking some things off your plate with a VA, outsourcing some tasks, it depends on what you do, right? But like, look at it as like 25%, a quarter of that should go to upholding the business so that you can have some breathing room. And you might lump in, 5% for your tech stack. Okay. So you're at about 30% to operate the business, and that's completely normal. You'll also get that back with respect to like tax deductions and all those things, because you're spending money to make money, right? And I'm not a tax accountant. I'm not a lawyer. So just, check with your accountant and all that stuff. But generally that's what that is. Then from what's remaining, the 70%, you need to pay yourself a living wage. Then you also need to pay and put aside money to pay the taxes. Whatever is left over at the other side is what you are profiting. And a lot of business coaches are going to tell you, well, just do expenses and, revenue minus expenses equals your profit. And that's okay. That's okay. Except for that, I'll be totally honest with you. When I first started making real money in my business, I was following the profit first methodology. And if you are anywhere in business, you have heard of this. It is not wrong, but it is absolutely not profitable if, and this is what I have learned, if you are running a creative business that entirely relies on you. I'm going to say that again. It is not wrong, but it's not the best way to run profit if you are running a business that entirely relies on you. And here's why. Because it tells you that if you're making less than $250,000 a year, which more than half of women-owned businesses make less than $250,000 a year. If you're making that, it's telling you to reserve 5% every month for profit. Cool. And then it coaches you at every quarter to take whatever that amount is in your profit account, split it in half, save half of that, and spend the other half. I started doing that. I felt great. I was like, I'm going to buy a vacation. I'm going to go, buy this fancy treadmill that I wanted. So that's, I did all those things and cool. But then here's what happens is you are leveraging your actual future. Because I sat down with a real financial planner and I was like, well, I'm following profit first. Am I not doing this right? And she was like, 5% profit is nowhere near enough. You need to be doing like 20 to 25% profit, because I'm not building a business that somebody is necessarily going to come in and buy from me. Story Studio Network, maybe. We have enough process and, standard operating procedures that we do have a book and a bank of business procedures that somebody may want to buy. But I'm not about to build a business and start taking profit and really good salary from, and then in 10 years, I'm going to be able to sell it for millions of dollars and that will fund my retirement. I'm not doing that. I am working now with my own faculties and agency now in order to fund my retirement later. And without getting into extreme financial advice, here's what it really comes down to. If you are making less than $250,000 a year and only taking 5% profit and paying yourself, even if you're paying yourself 50% of revenue, you are still not putting away enough to have the freedom future that I think you and I both want. And when I saw that written down on paper, I realized, oh my goodness, there are too many business coaches out there saying, raise your prices and then go buy a first class airline ticket. And I'm saying, raise your prices so that you can pull a 20% profit margin instead of 5%. And then, yes, you can afford the first class ticket, but you're also building your future. So when you're raising your prices, think of it through the lens of margin. Now, here's the other thing that I want you to consider, because this is what I've gone through. And this is what I went through when I stopped working with these traditional business coaches and went into a 2-year-long program to examine the operations of my business. How is my business being managed, self-managed, and operated in order to create efficiencies that free me up my time and my money? This is not about getting more. And what it ended up helping me see is that I really only want to work with 5 or 6 communications clients at a time. And Story Studio Network, in the beginning, if I had worked with a traditional business coach, they were telling me that I needed to do 30 productions a year. And I kept telling them that is going to require me to triple my team. My costs are going to go through the roof. There will be no profit there. It's going to make me a busy fool. And filling the funnel in order to get 30 productions was going to require me to talk to 300 potential leads, which in this market is insane when it was only me doing the sales. So you see where the problem is, right? So what it allowed me to do by tightening my operations and focusing instead on my margins is now I only really need 5 or 6 productions on the Story Studio Network side. And in some cases, some scenarios, it's only 4. And I still hit my revenue goals in the company, my profit goals, and my freedom goals, because I am not scraping the bottom of the barrel for only 5%. I have adjusted my pricing and my operations to allow me to have freedom and leverage. And now when you're at the stage that I am, the other thing that 20% does is it fuels the growth of the business. So I have enough now coming in and staying in that if I do need to go out and hire someone else, or I do need to invest in marketing, or we decide to make a big spend on, I don't know what it would be, like going to a big conference overseas, I have the leverage. 5% is not leverage. 20% is leverage. 20% or above is leverage. And listen, if you're running a company, I was chatting with a friend and he's in construction. Sometimes you can get like 80% on some of that, right? So thinking about profit as a lever for your future is the way to think about it. And here's the other thing that you're going to see is that you can have a 6-figure business, multi-6-figure business, and still be struggling financially. I was scrolling around yesterday on Facebook and there was some event and it had passed, so I wasn't able to purchase the ticket. But this woman was out there marketing and saying, man, there was a day I remember a few years ago when I had $3 to my name. $3 to my name. She was over leveraged on her credit card. She was over leveraged. She had a double mortgage taken out. And she was like, she had $3 to live on. And that rock bottom is what made her have some sort of spiritual enlightenment. And she went off to become a debt recovery coach and teach people about how to run finances. Now, I don't know about you, but that doesn't instill any kind of confidence in me when somebody is telling me to take on bad debt in my business and that they also have a habit of overspending. It doesn't align with me. It might align with you. That might be something that can help somebody like that energy might be able to help you if you're in a situation like that. But all I'm trying to illustrate is that this woman had this air of she had a brand. She was performing this fancy brand. And yet it really makes me question, is it all coming in? Cool, you're doing 200K months, but then is it all just going right back out again? And if it is, cool, maybe she has a plan and maybe she coaches on a plan for how to do that other than just to keep going forever and ever, amen. But what I have learned, and this is why I went back into this, like I said, operational program, is like, I don't want to be like that. I want to generate profit in my business so that I have choices, that my choices expand as my business grows, that my only choice isn't ever just go make more money. next year I'll have more choices. Do I want to work more? Do I want to work less? Do I want to work differently? Do I want to work because I have built a profitability engine, not necessarily just a revenue engine. Do you see what I'm saying? So this is what I think really bugs me. Now that I see it, I can't unsee it, about the way that creatives are being taught about money. You have to think about, how is this energy, because money is an energetic exchange, how is this energy fueling you? And not from an ego perspective, from a vision perspective. If you go out and make $200,000 in 1 month, I want you to be able to tell me, how is that fueling you in a way other than performative? How is that going to fuel you? Are you going to take 190,000 of that and put it into the market and know that, whatever that rule is, in 12 years, that will have doubled, because that's what the math says, right? Like, you put it in the market roughly, you've got 12 years till that money just doubles without you doing anything. And then do you tell yourself, cool, I just made nearly $400,000 this month, and that's fueling my vision? Or do you go and buy a first-class plane ticket, hire a new team member, get a fancy rebrand, buy a new wardrobe, buy a sports car, send your kids to private school, invest in buying a horse, or buying something really expensive like a yacht or whatever, right? That's performative, egoic-based validation. And what that's going to require you to do is to continue operating at that level of going and getting that 200K month again. It becomes like a dopamine hit. And I'm not saying any of that is wrong. I'm just saying that I have been brought to a place where I have realized that is why that kind of coaching never worked for me, because it doesn't align with what I feel is my purpose and my own energy. My own energy is about vision-based freedom. So when I started to really unpack all of these kind of baseline pieces of advice about business, profit, money, attraction, and I started to really evaluate, how does that land in my body? I rebuilt my business. It resulted in tangible action that I took in my business, changing the way I set goals, changing the way that I charge money, changing the way that the money flows through my business, all of it changed when I started to think about it through the lens of, what am I even doing this for? What am I doing this for? So here's a few just key takeaways from the pulpit that I am on today. Clearly, I just needed to sit and stew and scroll for an hour before I got into this episode, is that your pricing has to account for all of your costs, not just your time, not just your cost of delivery, your salary, your operations, your taxes, and your profit. That is how I want you to think about pricing. That is what I want you to think about. If you're going to raise your price, make sure it increases your margin or it maintains your margin. Like, set your margin and work to that margin. Don't work to the price, work to the margin. That margin is non-negotiable. It's how business works. So Story Studio Network, I know. If a client comes to me with a specific ask for one of the kind of services that we offer, a service tier, I know roughly within 0.5 percentage point what the margin is going to be on that project. And I can say, this is worth it to me, or this is not worth it to me. I know if the margin dips below a certain amount. When we work with not-for-profits, I allow that margin to dip, because that's how I let myself do the work. We're still making some, but I cut the margin. So I take a haircut because it's a not-for-profit. That's how I do that. And I know if they come to me and they ask for the biggest thing, I know what the margin is on that. You also need to make sure that it scales up or scales down. So maybe you want a 30% margin on your smallest offer because it's the hardest to execute and it's a lot of legwork up front. But your largest project, maybe you're willing to take a 25% margin because it's over the long term. The overall numbers are bigger. 25% of a larger project is actually a bigger profit at the end anyway. So this is how I want you to think about it. And all this, what I just said, means you need to know your numbers. And there are so many creative service-based entrepreneurs who bury their head in the sand about this stuff. And they just think it's the top line. Well, I'm going to charge $5,000 for this program. Okay, cool. What does that actually mean? And don't give me that gobbledygook of like, well, if I sell 2, it's 10K. If I sell 3, it's 15K. Yeah, okay. We all did grade 3 multiplication. We can all figure out how to get to 9. Okay? We can all do math. But what does it actually mean for you? Are you setting yourself up in a cycle of constantly having to launch? Are you setting yourself up in a cycle of never being able to escape work? The profit is your leverage. The other thing that it lets you do is be in some low months. So I am heading into a lower period right now just because that's how comms work happens. People don't usually hire comms strategists in Q4. They're usually already locked in. So I'm already thinking to next year. And I know I'm going to have a couple low months right now, but that's how it happens every single year. So I use my profit to plan for that. If I was only taking 5%, I wouldn't have enough of a buffer to make me feel safe and secure. The last thing I want you to remember is you're going to see a lot of, frankly, baloney online about scaling. And what I just told you is that I did fall into that trap of you have to scale to 7 figures, multi-7 figures. And I tried to get into that mindset. And I very quickly realized that that vision, that energy of scale didn't actually align with how I want the money and the effort to flow in my business right now. So I ended up instead doing the opposite. It looked like I shrunk, but what's super cool is that yes, we did. We reduced our workload a lot, but I have so much more free time to explore and expand, and my margin is better than it was because I have more space now. So I'm not taking every client that comes, which is causing less stress, which is actually helping me keep and maintain the clients that do have the better margins. I descaled in many respects, but it made me more profitable. So it's a myth that scaling equals profit. That's not always the case. I am living, walking, breathing proof of that. So I hope this has given you some food for thought today, because it's something that has been really bothering me about how I'm seeing business advice packaged and marketed to women. Just be really wary. Use your senses. Is somebody saying something so outlandish about money, investing, debt, revenue, raising prices, that it causes you to even just be kind of like, huh? Oh, and it may well be solid advice, but all I'm asking you to do is consider how it lands for you and ask the next question that comes to mind. Just ask it, and you may discover that you're making it harder on yourself than it needs to be. Profit is not a dirty word. In fact, profit is like the best word, not revenue. Profit over revenue. So here's I've been calling it a devotional, but this is actual homework. Get comfortable with your numbers. What was your revenue last month? What was your profit last month? And if you can even do it, if you sold a bunch of different things, try to come up with what your margin was on each of those things. And then just do an experiment and see, is there a way that you can maintain your level of service and integrity and maintain a certain profit margin? It's a really fun game. It doesn't mean you have to do it that way, but play with that. Play with that. And I will say, just try to make it higher than 5%. Okay? Try to make it higher than 5%. All right. It is Friday today. So tomorrow we're going to do a card pull, and I'm hoping also to do a special episode this weekend because it is my daughter's birthday, which makes me nostalgic. So we might go down a little bit of a rabbit hole. And I've been wanting to discuss the energy of selling your business. And for those of you who are just joining me, you may not know that I sold my blog business back in 2021. And I have not really publicly disclosed much about how that all went down. So I'm really sitting with whether it's time to have that discussion. Anyway, thank you for joining me today on the Transmission series. As always, like, share, comment, follow, subscribe, send me a DM, all the things. I'll be back tomorrow.